Well, good day there, Wealth Press subscribers, viewers, traders, and investors. It's time for another Monday morning roundtable. We have an abbreviated panel thanks to Hurricane Eta. And I'm joined today then by just Roger Scott and Adam Sarhan. Gentlemen, how are you today?
Excellent. Thanks for having us on.
You bet. Okay, well, let's talk about the market here. It's game on for the risk on trade. Adam, why don't you give us an overview of what's happening across the markets?
Sure. Last week I was right and I was wrong. I said Trump would win and the markets would take off and soar. I was bullish. I was wrong about Trump winning, but I was right about the markets taking off and rallying hard. So what's happening here is we're seeing this morning, we had the big news of the potential vaccine, or 90% good rate in phase 3 between Pfizer and BNTX. That's a really good sign. The market's breathing a collective sigh of relief. What happens when you see this kind of change in sentiment almost on a dime is that you see a lot of the areas, think of a basketball when you hold it underwater and then you let it go, it just shoots up. A lot of the areas that have been depressed because of COVID or undervalued or just haven't participated in the rally and since March have just soared and taken off this morning. And Roger has really been all over this with the Russell. I'm sure he'll get to that in a few minutes here. And a lot of these stocks that just haven't participated, whether they be transportation stocks, energy stocks, the hotels, financials, the list goes on and on and on. A lot of the travel and COVID-induced stocks have just really been under pressure, or they haven't really rallied. So now they're just taking off. For me, what I want to do now is see what happens going forward. Is this going to be an unwinding of the stay-at-home stocks? And then the beginning of that, back to normal or pre-COVID kind of world stocks? Or is this just a pullback for those stay-at-home stocks that have been extremely strong? And you can look at the QQQ or the NASDAQ 100, where most of them reside, as a good proxy for that. And then will it be a tide that lifts all the boats where everything just goes up? And that's still yet to be determined.
You bet. So, Roger, that does lead me to my query for you. Tell us about your prediction on the Russell 2000. Tell us about the companies that make it up and why it is performing so strongly, as per what you've been telling us for weeks now.
Yes, I've been saying for months that if the Russell starts outperforming ahead of the election, it's going to be a very, very strong sign that Joe Biden is winning the election. And last week when we were here, I told you guys that the Russell is leading and it looks like Joe Biden is winning the election. And I also said that momentum levels on the NASDAQ 100 are grossly overbought. And I'm looking at the September 2nd high. And until the index takes out the September 2nd high, it's no soup. So why? So let me answer that question. It's actually really, really simple. Joe Biden is going to put an end to this trade war. He may not say it in those words, but he's putting an end to this trade war. The trade war has impacted the small cap stocks a lot more than the large cap stocks. If you look at the Russell 2000, the day that, or the week that Trump announced the trade war, they started underperforming the broad market. They made an all-time high beginning of this year, where the S&P 500 made an all-time high September 2nd of this year, just 2 months ago. So since the first debate, the Russell 2000 has been outperforming the broad indices. Why? Well, the Republican government is a lot more tougher on China than a Democratic government would be. Also, the Democratic part of the government is not going to impose a lot of restrictions on smaller companies. They would more than likely put restrictions on larger companies like the NASDAQ 100 stocks, like the FANG stocks, which are underperforming today and are appraising the fact that Joe Biden would win the election. So the reason for all of this is really, really simple and very, very fundamentally based. The Russell has pent up demand that has been building up for 7.5 months now. And finally, it's reflecting its value and it's making all-time highs today, along with the S&P 500 and the NASDAQ 100. It can't even go above the September 2nd high. Last I checked, the S&P 500 was up 0.5% and the Russell was up 7%. So the Russell is outperforming the NASDAQ 100 stocks by a factor of 14 to 1 today. A factor of 14 to 1. Yes, I'm not misquoting myself.
That's incredible.
Yes, and because it's simply appraising the fact that there's not going to be a trade war. Now, let's talk about moving forward. I think over the next few weeks, I think we need to let the markets rebalance themselves. I think this is going to be a rebalancing period because, number one, a lot of investors, traders, and people have still not given up 100% on Trump. So that has not fully been in the presidency that Biden has won has not been fully assimilated by the market. I still think that it's maybe 80% there, but not 100% there. But I think by the end of this week, we will have a very clear focus of who is going to run the show. Now, from what I'm understanding at this point in time, Senate is still Republican, and that's giving us a nice broad balance. I'm very happy that we're still having some Republicans in the government, because otherwise we may have a Bernie Sanders type of an economy, and nobody really wants that for the market. Socialism is not a good thing for us. So again, I think we need to right now kind of figure out where we stand. The fact that volatility is high. Remember, folks, volatility, no matter if the market goes up or down, volatility is going up. And if the market goes up this much, that means the market can go down this much. It's a double-edged sword. So this is kind of going back to what Adam started the conversation with. We kind of have to sit tight and wait and kind of see where things land. Let the market appraise itself and show us where it wants to go. I think for the next 2-3 days, we're going to be it's going to be Wild West, for lack of a better term. Sorry for taking so long to answer your question, James, but I had a lot to say.
Yeah, no, that's good. That's all valid points. So then there was some discussion in the news media this morning about a vaccine that was proving to be 90% effective that was created by Pfizer. To what extent is the market exuberance related to that good news from the virus or from the vaccine sector? Adam?
Sure. So I think that's the headline of the day, right? So we have, for the first time in forever, really, it feels like we're getting closer to a real vaccine that can shift sentiment. Roger's point about it not being implemented on a day-to-day basis, it's not going to change things tomorrow. No question, it's going to take time, and it's going to be very murky and bouncy and volatile, and we're not sure how it's going to actually be implemented. But sentiment can change on a dime. And what's happening, is that we're getting to a place that's closer to us finally being able to breathe a collective sigh of relief. I think the entire globe is waiting for that. And once we're able to breathe that collective sigh of relief, that's going to release a lot of anxiety and just cooped up pressure and so on and so forth from a mental health standpoint. Now, when we get to an investing standpoint and a practical day-to-day standpoint, we still have, I think, 129 or 128 other companies that are very close to developing vaccines or working on vaccines. And other vaccine stocks, surprisingly, are up today. I thought the other vaccine stocks would get hit today. Most of them are actually up and up nicely. So for me, there's a very, very huge market, which, James, I believe you pointed out to earlier this year with this whole vaccine news. And there's more than enough room to go around. So if we get 3 or 4 or 5 companies that develop vaccines and each one attacks it in a different way, and it can be implemented in a different way, that'd be very bullish for me, because A, we don't have to worry about one company or 2 companies, one vaccine, so to speak. But 2, secondly, there's going to be huge profits across the board for them to be distributed with a lot of these biotech stocks. So from an investing standpoint, it's a big, huge shift in sentiment, meaning people can breathe a collective sigh of relief, or they can go to hotels again, travel again, cruise ships if they're brave enough or they feel comfortable enough, airlines go up, all that kind of stuff. And then secondly, from a practical standpoint, a tremendous amount of money is going to be flooded into these, from an earnings standpoint, into these vaccine-related stocks, and that could last for years to come.
Right. And Roger, do you have a sense that the vaccines that we're talking about could give us some thought about the eradication of coronavirus? Never mind just a sort of diminishment of the pandemic, but maybe total eradication is on the horizon?
Well, I want to talk a little bit about that, and Adam has hit on some really solid points, some good topics. As I mentioned to you guys last week, probably, I just had an annual physical last Thursday, and I was talking to my doctor, and the doctor said, "Look, it looks like." I didn't even ask this. I guess this is because I guess a lot of people are asking, so he just decided to tell me before I would even talk about it. And he doesn't know what I do for a living at all. So we were just talking, and he says, yeah, we're expecting to start getting a vaccine via emergency procedures sometimes next month. You're not going to get it for about 5 to 7 months, 6 months on average, he said, because of all the reasons we talked about. First, the people who really need it bad are going to get it. Elderly people are going to get it. So it's going to be a process. But Adam is 100% right. Even if that process starts and we don't have any finality, the markets appraise things way ahead of time. As soon as they sniff anything, it'll become priced in. And remember, James, you've got analysts who are like on the, are sitting there, literally watching these things being done and reporting it to analysts and their funds. So by the time we get all this news, a lot of it is already priced into some of the stocks, which is why I look at the large caps. But I want to say something that may be distorted. I want to make sure that we're all on the same page, because Adam, you mentioned that there was a lot of companies that are going to be coming out. I've talked to people about that, and I've actually looked at the research. There's only 3 companies right now that are in phase 3, and Johnson & Johnson is one of them. And we don't know how long it's going to take the others to get into phase 3. So there's probably more companies than you've even mentioned that are doing something about it. But in terms of actually on the horizon with like human testing, and I mean real like potential, there's only 3. And one of them actually had a major setback a few weeks ago when they had like the negative. I don't remember which one it was at this point.
AstraZeneca, AZN.
I believe that and they found nerve damage, that a
Right.
person had nerve damage. But the price was not impacted very much with the stock. So while I do agree with you that there's a lot of them on, and eventually 10 years down the road or 5 years, there's going to be probably 100. But right now, what I'm seeing a lot of these companies doing is actually helping the other companies and jumping through the hoops that way in hopes of getting market cap, because they're stuck in the discovery stage and they want to profit from some of it. So while there are hundreds of companies working on the vaccine, realistically speaking, there are only 3, from what I understand, or 2.5, that are on the brink of actually coming out with something usable. So we got to kind of take that into. But I do agree. But more importantly, I do agree with your point that the market will begin. So whether I'm wrong or right, or it won't make any difference, because the market will start assimilating it as soon as even those 2 or 1 is. So yeah, you are on a principle, the way the market will behave, I couldn't agree with you more. And that's going to be something we're going to start looking at. I just believe the next few days, the markets have to kind of almost arbitrage themselves adjust based on, because the country, that these 2 the Trump and candidates, if you will, they are so opposite of each other, and they have such opposite beliefs that I think the market has to really kind of sit back and kind of, it's like a bottle of wine that's been sitting there and it needs to be popped, and it needs to sit there breathe. You got to let it breathe a little bit.
Right.
I think that's where we're at right now. And I think it's too early to make longer term predictions, because there's just so much that needs to be priced in, if you will, over a very short period of time.
Yeah, that's it.
Sure. So do you think there's a lot of uncertainty around the outcome of the election still priced into the market? And I'll throw you to that to you first, Adam.
Sure. I not so much that there's a lot of uncertainty at this stage of the game around the outcome of the election, but to Roger's point, which is fantastic, it's not that we don't know what's going to happen with respect to the election and the voting and the phony president, not phony president, all that kind of fun stuff. What we don't yet know is how the dust settles. So think of like a building comes crashing down, and then you have all this dust all over the place, and then eventually the dust settles. I think that's what the analogy was trying to use, or something to the effect of, you eat a huge meal, you have to digest it before you go for a run marathon, right? So it's the same thing now, where if the market, I do want to say this, and this is a really important point, if the market sells off We have a huge move up today. I mean, one of the biggest moves, price moves ever. If the market sells off and falls for enter any reason you want over the next several days and or weeks, that's going to be a very bearish sign for me. And that's going to change my stance, because it's not so much the news that matters from my standpoint. I care more about how the market reacts to the news. And right now, the reaction so far has been bullish. We've got the Fed printing money. We've got markets going up no matter who wins the election. We've got markets going up no matter what happens to earnings or the economy. But what I care about, if that dynamic changes, enter any reason you want, and stocks stop going up and instead they start going down, especially if that happens on bullish news for an extended period of time, that's going to completely change the dynamic on Wall Street.
And Roger, what do you think?
I couldn't agree with Adam anymore. I mean, he's 100% right. It's just the way it is. We kind of need to see the dynamic, and kind of it's just too much too fast. That's what it is. It's too much too fast, and we need.
Yes,
What is that sound?
no idea. Might want to mute Mike, whoever's not speaking.
Oh, there we go. Okay. So as I was saying, I think the market needs to calibrate, and I think everything Adam said, I can't really dispute anything he's saying right now, because he's 100% on the level. I think we just need to kind of let things
Simmer.
simmer. Yeah, let things simmer. And remember, folks, for anybody watching this, we're not dealing with an algorithm. We're dealing with millions of people making decisions, getting something and the elections were close, regardless of this whole conspiracy theory, who won, who lost, the voter count. Forget winner or loser. Look how close this election was. There's a lot of people who need to absorb things. There's a lot of people who need to kind of get a feel for it. There's a lot of traders out there who were huge Trump fans, who made big bets, who need to now unwind these bets. So I think right now, the only thing we can kind of ascertain is where the market is going to go based on the most probable outcome. But I think based on the gains that we're seeing and the volatility right now that we're seeing, the best thing anyone can do is still follow the guidelines we've been giving them. Lower exposure to 15-20%. Wait till see how this thing resolves. We're not out of we're almost out of the danger zone, but not quite yet. But Adam is 100% right in terms of seeing where things go, seeing where things shake out, and kind of going from there. Because right now, I have a pretty good pulse on the market. But someone like me right now, with seeing what the market action is doing today, seeing the NASDAQ 100, even I'm doing something I've maybe done 5 times in my life, closed out system trades early. I'm booking big gains right now because there's just too much unforeseeability right now. I'm treating this period as if the market as if the Dow Jones was down 1,500 points.
Sure.
Because to me, it doesn't make any difference.
Right. All right. And Jeff Yasteen's joining us now from South Florida. Jeff, and how's the hurricane down there?
I was just for a walk with my dog. We have bright sunshine outside and lots of pom-poms around. But other than that, everything's fine. Because I live on the east coast of the state, but some flooding last night. But again, just street flooding, minor stuff. By our things anyway. So I take it we're talking about the stock market today.
Yes, we are, as a matter of fact, and we're talking about the effect of the uncertainty surrounding the outcome, or at least the absence of clarity at this point in the outcome of the election, and the potential for some surprises yet. And so, wondering how that's affecting your attitude towards the market and what you're seeing from where you sit.
I have to tell you, I'm very excited by what I see in the stock market. I love what we're seeing as far as this, and it's something I've been talking about for a while now, as far as this move out of tech to sell these very highly valued, overvalued tech stocks and start moving into the ones. It's not the broken record, but industrials, energy, financials. I mean, Exxon's up 12% today. We've got the cruise line stocks, Royal Caribbean and Carnival, up, what, 35%, 30% for Royal Caribbean, 35% for Carnival. And the way I see it, it's sort of like thinking back to where we were in March, and except we're on the, flip it around like you're looking at in a mirror. It's all those stocks that I just mentioned, or those sectors that I've mentioned, which have not been pulling their weight until now. Now suddenly it's like, oh, okay, we got this vaccine news. We got to buy these. Obviously, they're not going to go straight up. They're not like they're not like this Zoom or some of the that you're not going to see these oil stocks double in a few weeks or a month. But I think what we're going to see is this constant move out of these bigger, just well-worn tech trades and the work from home trades that are tech oriented into these other stocks. So to me, I agree in that you look at like the S&P 500, you can definitely say, well, it looks like basically double top here. Absolutely. On the other hand, I like what we see with the Russell 2000. It hasn't, Roger's talked about this many times, hasn't set a new all-time high since August of 2018. So I think what we're going to see here is just a shift towards new market leaders, and basically these old sectors that have not been pulling away are going to step up while basically tech digests or consolidates for some period of time. And I think the market just is looking beyond. Sorry, you asked about Trump and Biden. I think the market's kind of done with that. I don't doubt if Trump says something, volatile, that it causes some temporary weakness, but that would just be a chance to basically buy more of these kinds of stocks on weakness, and buy on those big weak days, because CVS is a stock I mentioned on election night, and it's up like 20% since then, and it's still only just getting started. It's just basically moving above its 200-day moving average. It's trading basically still book value. ExxonMobil, Chevron, a lot of these oil stocks are trading just at book value, even after today's move. So again, not that they're going to go up, every day 20% or 15% a day, but this is the time to make those moves into these sectors, knowing that think about where the market's going to be a year from now and 2 years from now. Don't get caught up in the sort of FOMO, fear of missing out thing that we all feel on days like today if you're not parked in exactly the right kind of sector.
Okay, great. And Roger, wrap it up for us now. So what's the strategy for our viewers at home?
Keep your eye on the NASDAQ 100 because momentum levels are grossly overbought and it's lagging grossly behind. It still has not taken out the September 2nd high, that same high that the S&P just did, the Dow just did, and the Russell double did. The bottom line is, I think the market needs to recalibrate. I think the best thing right now to do is give it a few days and kind of see what's going on, not to jump or overreact. A lot of the large cap stocks are overextended. I want to see how the stay-at-home stocks are going to react to this virus, Pfizer announcement, and I want to see how if Trump's legal team has any teeth over the next few days. So I am right now in a holding pattern. I'm actually taking profits. We have 3 trades that we took triple-digit gains on this morning, actually, believe it or not. So I'm taking profits right now. I'm sitting on the sidelines, and I want a little more clarity. So this is not a time to be a hero. Volatility is a double-edged sword because you can make a lot of money and you can lose a lot of money. So I'm telling everybody to only have about 15 to 20% exposure. Wait till this thing cools off. Wait for a little pullback in the gap that we're seeing right now to fill in, which looks like it's happening right now. Give the market a little time to adjust. Don't make big decisions based on what's happening right now. Just kind of give it a few days. Don't be a hero. Don't jump in. There's going to be plenty of opportunities. Things are just starting to get interesting. Things are just starting to heat up. I've been telling anybody who would listen that we're gearing up for a wild bull market. And again, I just think we need to find a good entry base, and a good low risk position. And I don't feel comfortable about anything being low risk right now.
Okay, great. We'll leave it there for now, gentlemen. Thank you very much for your time today. I look forward to speaking to you throughout the week. Have a great trading day.